You know, normally when we analyze a medical diagnosis, there is this comforting expectation of precision. Like you break your arm, you go to the hospital, and the x-ray shows this very clear, jagged white line on a black background.
Right, yeah.
And the doctor just points at it and says, you know, there it is, bone broken. It's totally binary. You wrap it in a cast, and you just move on.
Yeah, it's the comfort of a deterministic system, right? The inputs and the outputs are, well, they're entirely visible to the naked eye, and the remedy is straightforward.
Exactly. But then you look at certain financial earnings reports, especially, you know, when we start treading into this bleeding edge, deep tech hardware space, and suddenly you realize the x-ray machine is just utterly broken.
Oh, completely.
You're staring at a diagnostic landscape that is completely opaque. Yeah. I mean, you look at the top line revenue, and it looks like a catastrophic multi-organ failure. But then you flip the page to the underlying forward-looking metrics, and the patient looks like an Olympic marathon runner in their prime.
Which is pretty much the absolute definition of diagnostic muddy waters. And if there is one thing Wall Street algorithms are, you know, entirely incapable of processing, it's muddy waters.
Right, they panic.
They do. Because algorithmic trading models, they're built for those clean breaks and clean bills of health. They parse a headline, they see a revenue miss, and boom, they trigger a sell-off in milliseconds.
Which brings us perfectly to the ultimate investing paradox we are unpacking today for our Talk Tickers analysis. So imagine you are holding a stock in your portfolio. The company drops its Q1 earnings report, and the headline blares an 81% drop in revenue.
Ouch. Yeah.
Right. Your immediate instinct is to hit the panic button. But in the exact same breath, on the very same conference call, management claims they are actually having a record-breaking quarter. And they point to bookings that are up like nearly 2,000%.
It creates complete cognitive dissonance for the retail investor. I mean, it is a space where classical financial models seem to break down entirely, which is ironically mimicking how classical physics breaks down at the quantum level.
That is a perfect way to put it. We are diving into D-Wave Quantum's Q1 2026 earnings call today. Ticker symbol QBTS. For you, the listener, you know, whether you are currently bag holding the stock or considering a position, or maybe just trying to map out where the trillions of dollars in next generation computing capital are flowing, our goal today is data forward and highly actionable.
Yep, no fluff today.
Exactly.
Yeah.
We are skipping the superficial press release summaries for this deep dive. We're going to dig into the physics, translate the heavy Wall Street jargon, and figure out how a company can simultaneously lose 81% of its revenue while boasting the best quarter in its corporate history.
And to figure that out, we really have to start by dissecting that jarring top-line number. Because Q1 2026 revenue came in at a microscopic $2.9 million.
Wow.
Yeah, that is a massive plunge from the $15 million they reported in the exact same quarter last year.
Right. And if you are a momentum trader just skimming a Bloomberg terminal, an 81% top-line contraction is, I mean, that's usually a terminal diagnosis. It literally looks like the customer base has completely evaporated overnight.
But see, that is the danger of relying on raw year-over-year comparisons in enterprise hardware, especially in an industry that is still, you know, fundamentally in its infancy. We have to look at the anatomy of that $15 million number from Q1 of 2025.
Okay, so what's hiding in there?
Well, last year, D-Wave recognized a massive, totally anomalous one-time system sale, and it was worth $12.6 million. They physically delivered and installed an entire quantum computing system for a client.
Oh, wow. Which is essentially the modern equivalent of selling a room-sized mainframe back in the 1960s, right?
Exactly.
It's a massive, lumpy capital expenditure for the buyer.
Yeah.
And it completely skews the seller's revenue curve.
Precisely. If you strip out that $12.6 million whale of a deal from last year's Q1, the narrative of the underlying recurring business, it completely flips. The true day-to-day operational health of a company like this is actually found in its software as a service revenue, which D-Wave calls QCAS, or Quantum Computing as a Service, and its professional services division.
Okay, let's run the numbers on that underlying base then. Because if we completely ignore the giant hardware drop from last year, QCAS subscription revenue actually climbed 15% year over year to $1.8 million.
Right.
And professional services grew 26% to $1 million. So we're looking at solid double-digit growth in the exact recurring revenue streams you desperately want to see expanding in a tech infrastructure play.
And there is a really crucial qualitative metric attached to that revenue, too. Every single dollar of it was derived directly from quantum computing systems.
Wait, why does that matter? Are there competitors like padding their numbers?
Oh, absolutely they are. The quantum sector is notorious for companies artificially inflating their quote-unquote quantum revenue by selling peripheral legacy technologies. Things like classical networking equipment or basic quantum sensing tools, or even just consulting hours that are completely unrelated to actual quantum processing. But D-Wave's revenue is pure play. It is generated by clients directly accessing their quantum processing units.
Okay, so the core business is actually growing, which completely contextualizes that 81% drop. But wait, 2.9 million in quarterly revenue is still incredibly small for a publicly traded company. I mean, it doesn't justify a massive valuation.
No, it doesn't.
Right. What justifies the bullishness is the number that completely shocked me on this call. The bookings.
The bookings number completely changes the gravitational pull of the entire earnings report, honestly.
It's wild. Bookings for Q1 2026 hit $33.4 million. That is a 1,994% increase year over year.
Yep.
And perhaps more importantly, it is a 149% increase sequentially from just Q4 of 2025. It is an explosive metric. But, as an investor, I can't pay my mortgage with a contractual commitment.
Very true.
A booking is just a signature on a piece of paper. It's like a real estate developer pre-selling a luxury condo before the foundation is even poured. I mean, the brochure looks great, the deposits are in escrow, but when does that $33.4 million actually hit the balance sheet as recognized cash for the retail investor?
Well, that gets right into the weeds of enterprise accounting, specifically ASC 606 revenue recognition rules. D-Wave basically cannot legally claim that $33.4 million is revenue until the performance obligations of the contract are fully satisfied.
Gotcha.
But to understand the timeline, we have to look at who is actually signing these massive contracts, because this wasn't 50 small research grants, This was driven by two absolute landmark deals.
Right. The first was a $20 million physical system sale to Florida Atlantic University.
And the second was a $10 million enterprise cloud license.
$10 million just for cloud access.
Yes. That is a historic milestone for the industry.
Yeah.
A $10 million software license is literally the largest single enterprise commitment for quantum computing as a service on record.
That is insane. I mean, think about the psychology of a corporate procurement office signing off on a $10 million software license.
Yeah.
That tells you the enterprise demand is actively leaving the quote-unquote science experiment budget, and it's entering the core commercial operations budget.
Exactly.
You don't spend 8 figures just to let your R&D team play around with a neat new toy.
You really don't. And the demographic shift in their customer base totally proves that out. Over 50% of their individual customers in Q1 were commercial enterprises, and those enterprises made up over 73% of the quarter's total revenue.
Wow.
Yeah, we are officially migrating away from the era of government-subsidized lab projects and into ruthless corporate utility. But to circle back to your question about when this massive bookings influx actually turns into cash, we have to evaluate D-Wave's overall runway. Like, do they have the capital to survive the construction phase of these contracts?
Yeah, let's put up the balance sheet, because this is where the bear thesis usually starts to salivate. JAP operating expenses effectively doubled in Q1, hitting $56.5 million. And the net loss widened out to $18.4 million, which translates to about a 5-cent loss per share.
Right.
If I'm holding the stock, seeing expenses double while revenue technically shrinks is terrifying.
Yeah.
Where's all this cash bleeding out to?
Well, a massive chunk of that expense spike is just an accounting artifact from a strategic move they made in January. Specifically, $9.1 million of that increase was a one-time, non-recurring charge directly related to their acquisition of a company called Quantum Circuits.
Okay, so a one-off hit.
Exactly. They also swallowed an $8.6 million increase in payroll because they're aggressively scaling their R&D, sales, and marketing teams. So the burn rate accelerated, yes, but it accelerated to digest an acquisition and staff up for these new $30 million bookings, not because their legacy operations are suddenly hemorrhaging cash.
Right. And this leads to what I consider the single most critical data point for the actual safety of the stock. Even after spending $250 million in hard cash to acquire Quantum Circuits, D-Wave's cash position is an absolute fortress.
It really is.
They are sitting on $588.4 million in cash, cash equivalents, and marketable securities. That is up 93% from the same time last year.
And look, the significance of a $600 million war chest in the quantum computing sector, it just cannot be overstated. Capital is the literal oxygen of this industry. Developing million qubit cryogenic systems takes decades.
Decades, yeah.
Right, and many of D-Wave's direct competitors are caught in this brutal cycle of having to constantly go back to the private markets, or they have to execute secondary public offerings just to keep the lights on, which of course relentlessly dilutes their existing shareholders.
Exactly. By having over $500 million in the bank, D-Wave has effectively taken the immediate threat of shareholder dilution completely off the table. They have bought themselves years of pristine, uninterrupted runway to actually build and deliver on that $33 million in bookings.
But those bookings, they don't happen in a vacuum. You don't get a $20 million physical system contract for legacy technology. To understand why a university and major enterprises are suddenly throwing 8-figure contracts at D-Wave, we really have to analyze the technology itself.
Yeah.
We have to look at why they were willing to part with $250 million in cash to acquire quantum circuits in the first place.
Because that is a massive bet the company kind of acquisition. I mean, it eats up nearly a third of their total liquidity.
Yeah, they made the acquisition because it fundamentally alters their market positioning on a global scale. Prior to January, D-Wave was entirely focused on one specific type of quantum architecture. But with quantum circuits under their umbrella, D-Wave is now the only company on Earth developing both annealing and gate model quantum computers.
Okay, let's elevate this for the audience, because anyone tracking the quantum space knows there is essentially a religious war between these two approaches.
Oh, definitely.
Let's start with annealing. Critics love to dismiss annealing as a niche offshoot, but D-Wave has built its entire commercial foundation on it. Walk us through the underlying physics of why annealing is so dominant in its specific lane.
Sure. So the easiest way to conceptualize annealing is to look at how it leverages quantum tunneling to solve optimization problems. Imagine a sprawling, totally jagged mountain range. You're trying to find the absolute lowest valley in this entire mountain range.
Okay, I'm picturing it.
In classical computing, your algorithm has to essentially climb over every single peak one by one to check the depth of the valley on the other side. It is exhaustive, it's slow, and computationally, it's incredibly expensive.
Right, and if you are a global logistics company trying to route, say, 10,000 cargo ships across changing weather patterns, or a hedge fund trying to balance a portfolio of 1 million assets in real time, the sheer number of possible combinations, the number of peaks and valleys is practically infinite.
Yes.
A classical supercomputer just chokes on that combinatorial explosion.
But a quantum annealer operates on a completely different physical principle. Instead of climbing over the peaks, the qubits use quantum tunneling to simply pass straight through the mountains.
Wow.
Yeah. The system is initialized in a ground state that is easy to prepare, and then through the transverse field Ising model, the magnetic fields are slowly evolved or annealed until the system settles into a new ground state that represents the mathematically optimal answer. It naturally sinks to the absolute lowest valley without having to map the entire mountain range at all.
That's fascinating. It's basically a custom-built physical engine designed to effortlessly slide into the most efficient state. It works today, it scales beautifully, and D-Wave is the undisputed heavyweight champion of it.
Yep.
But let's address the bears again. Because the prevailing criticism is that optimization is just a tiny, insignificant slice of what true quantum computing will eventually achieve. They argue D-Wave is winning a minor league game, while companies like Google and IBM are building for the majors.
Well, CEO Alan Barrett took a baseball bat to that exact criticism on the earnings call. And he didn't just disagree. He brought third-party data to the fight. He cited a comprehensive Boston Consulting Group analysis that models the total future quantum market at over $800 billion.
$800 billion?
Yes, and BCG estimates that optimization problems alone will account for a staggering $100 billion to $220 billion of that total addressable market.
You cannot rationally call a $220 billion TAM a quote-unquote niche.
It is an absurd characterization. I mean, a $220 billion market is roughly equivalent to the entire global cybersecurity market today. today. It rivals the total global spending on semiconductor manufacturing equipment. No one looks at Palo Alto Networks or ASML and says, well, they're just operating in a niche.
Right.
By dominating the annealing space, D-Wave is capturing a massive, highly lucrative, and immediately commercializable segment of the market today. They are generating real cash flow while their gate model competitors are still, frankly, writing theoretical research papers.
But with the quantum circuits acquisition, D-Wave is now officially in the gate model race too. And this is where the physics gets incredibly complex. Gate model is the holy grail, right?
Yes, it is.
It is the universal architecture designed to run Shor's algorithm to break encryption or simulate complex molecular dynamics from scratch. But the problem with gate model is coherence time and error rates.
Yeah.
The qubits are so fragile that even a stray cosmic ray or a microscopic fluctuation in temperature just causes the quantum state to collapse.
Which is exactly why the CEO spent a significant portion of the call explaining the breakthrough that quantum circuits brings to the table. He used a fantastic analogy to categorize the three primary approaches the industry is currently taking to solve this error correction nightmare in gate model systems.
Yes, this was the bicycle versus the airplane analogy. Let's dig deep into this because it crystallizes the engineering bottlenecks beautifully.
So Barrett started by looking at the approach using trapped ions or neutral atoms, which companies like IonQ or Quera are pioneering. He compared this architecture to a bicycle. The underlying physics relies on using lasers, like optical tweezers, to hold individual atoms in a vacuum.
Right.
And because these atoms are naturally identical and isolated from the environment, the bicycle is highly reliable. The base error rates are incredibly low, but the critical flaw is the gate speed.
Because you have to physically move atoms around with lasers to entangle them, the processing speed is just agonizingly slow. I remember the call cited a recent academic study demonstrating how you could theoretically break the Bitcoin SHA-256 encryption protocol using just 10,000 neutral atom qubits.
Yep, 10,000.
The catch, it would take months of continuous computation to run that single calculation. A bicycle is a very safe way to travel, but you might literally die of old age before you reach your destination.
Exactly. So then Barrett pivoted to the second approach, traditional superconducting qubits. This is the architecture championed by Google and IBM. He compared this to a piston propeller airplane. It relies on Josephson junctions and microwave pulses. And the massive advantage here is clock speed. A superconducting gate operation takes nanoseconds. It is thousands of times faster than the neutral atom bicycle.
But the piston airplane is a mechanical nightmare.
Utter nightmare. Superconducting qubits are macroscopic artificial atoms printed on silicon. They are violently sensitive to environmental noise. The decoherence rates are incredibly high. To get back to the Bitcoin example, Google published a paper showing how you could crack the encryption in just 9 minutes using superconducting qubits.
9 minutes compared to months, that's huge.
Huge. But because of the horrific error rates, you wouldn't need 10,000 qubits. You'd need 500,000 physical qubits just to run the surface code error correction required to keep the calculations stable.
500,000. You have a blindingly fast airplane, but the engine is constantly misfiring, and you need a crew of 500,000 mechanics on board just to keep it in the air for 9 minutes.
Exactly.
Which brings us to the $250 million acquisition. D-Wave acquired Quantum Circuits for their proprietary dual-rail qubits, and Barrett categorized this as the jet airplane.
Right. The jet airplane analogy claims to combine the blazing fast nanosecond clock speeds of superconducting circuits with the inherent stability and reliability of the neutral atom bicycle.
Okay, I love a clean analogy, but talk tickers requires us to verify the engineering. How exactly does a dual-rail qubit actually catch an error without collapsing the quantum state? Because the fundamental rule of quantum mechanics is that if you measure a qubit to check for an error, you destroy the superposition.
That is the absolute genius of the dual-rail design. In a standard superconducting system, information is stored in a single microwave cavity. If a photon is accidentally lost to the environment, which is by far the most common type of error, the information is just gone, and the system doesn't even know it happened until the final calculation fails. It's a silent failure.
But dual-rail changes the physical geometry.
Right. Instead of one cavity, the dual-rail qubit encodes the quantum information across two coupled microwave cavities. It acts like a built-in redundancy system. If a photon leaks out of one cavity, the system is designed so that the physical state shifts into a known error state that can be continuously monitored by an auxiliary readout resonator.
That is brilliant. It's like having a dual-engine commercial jet. If the left engine flames out, the pilot doesn't need to physically inspect the engine block. The telemetry instantly flags a drop in thrust and automatically compensates with the right engine.
That is a perfect way to visualize it. In quantum terms, this is called erasure detection. The dual rail system turns devastating, unpredictable Pauli errors into highly visible erasure errors. The system flags the error exactly when and where it happens, roughly 90% of the time, without destroying the underlying quantum information.
Wow. And the data they presented on this is staggering. The observed erasure rate is just 0.5%. They're demonstrating greater than 99.9% fidelity.
It's incredible.
Yeah, when you have hardware that inherently flags its own errors with that level of precision, the computational overhead required to fix those errors drops exponentially. You don't need 500,000 physical qubits anymore. D-Wave believes this architecture reduces the number of physical qubits needed to create one perfect logical qubit by an entire order of magnitude compared to Google or IBM.
And that efficiency solves the second catastrophic bottleneck in quantum scaling, which is the wiring problem. We call it the input-output, or I/O bottleneck.
Because people usually envision a quantum computer as this beautiful, sleek, golden chandelier suspended in a vacuum. But the reality is far more brutal. That chandelier is housed inside a dilution refrigerator operating at millikelvin temperatures colder than deep space.
Way colder. And in traditional superconducting systems, you need 3 to 5 physical coaxial cables running from room temperature control electronics outside the fridge all the way down to the quantum chip at the bottom for every single physical qubit.
Think about the thermal dynamics of that. You have millions of metal wires acting as thermal bridges, just dragging heat down into an environment that must remain near absolute zero.
It creates an insurmountable heat load. Barrett was actually merciless in pointing out that if competitors continue with this brute force wiring approach, they will literally need facilities the size of football stadiums just to house the cooling infrastructure required for a 1,000,000 qubit machine. It physically cannot scale.
But D-Wave has a proprietary workaround. They utilize on-chip cryogenic multiplexing. They can currently control 4,000 qubits with just 200 I/O lines. They're essentially putting the control electronics directly onto the chip inside the freezer rather than running individual wires to the outside world.
Yep.
So if D-Wave can successfully marry this highly scalable, low-heat wiring architecture with the self-correcting dual-rail qubits they just acquired,
they have arguably solved the two most intractable roadblocks in the history of quantum computing: error correction overhead and physical heat scaling. That is the $250 million investment thesis right there. They bought the jet engine, and they are bolting it onto their industry-leading cryogenic chassis.
But, having the most advanced jet on the blueprints doesn't mean much if you can't sell tickets. Which brings us to the commercial traction segment of the call. The prevailing theme management wanted to hammer home is that their customers have graduated from the proof of concept phase. They're deploying these annealing systems into active production environments today. And two specific verticals stood out: AI drug discovery and cryptocurrency.
Right, let's analyze the AI deployment first, because that is where the most immediate ROI is being generated.
I have to admit, I'm inherently skeptical here. As an investor tracking earnings calls in 2026, the moment a CEO forces the acronym AI into their prepared remarks, my internal alarm bells go off.
Oh, same.
It often feels like companies are just playing buzzword bingo to artificially inflate their multiple. Is D-Wave just trying to draft off the artificial intelligence hype cycle, or is there a genuine symbiotic relationship here?
Well, the skepticism is absolutely warranted, but the underlying molecular physics validates D-Wave's involvement here. The call highlighted a major partnership with Shionogi, which is a massive Japanese pharmaceutical conglomerate. Shionogi is integrating D-Wave's quantum annealing computers directly into their large language model training pipeline for generative drug discovery.
But why does a generative AI model need a quantum processor? Can't an NVIDIA GPU cluster just handle the math?
See, GPUs are fantastic at matrix multiplication, which is great for recognizing patterns in language or images. But discovering a viable synthetic drug is a fundamentally different mathematical beast. You are dealing with the combinatorial explosion of molecular chemistry.
Right, the peaks and valleys again.
Exactly. You aren't just looking for a compound that binds to a specific disease receptor. That molecule also has to be metabolically stable, non-toxic to human liver enzymes, synthetically viable to mass produce, and capable of crossing the blood-brain barrier.
The search space of potential drug-like molecules is estimated to be larger than the number of atoms in the observable universe. Classical machine learning algorithms, even running on massive GPU clusters, eventually choke on that sheer volume of possibilities because they have to evaluate the variables sequentially.
But this is precisely where the quantum tunneling of an annealing processor shines. The generative AI model basically dreams up thousands of potential molecular backbones, and it offloads the optimization step to D-Wave. The quantum annealer maps the chemical constraints as a massive energy landscape and instantly tunnels to the global minimum the single most optimal molecular configuration.
And the empirical results from Shinogi are incredible. The call noted that in the second phase of this deployment, the quantum-assisted AI pipeline delivered a 10x increase in identifying highly desirable molecules compared to using classical machine learning alone.
10 times. A 10x efficiency gain in early-stage drug discovery is a total paradigm shift. It doesn't just reduce computational cloud costs, it actively shaves years off the preclinical development timeline. When a single day of patent exclusivity for a blockbuster drug can be worth tens of millions of dollars, a technology that accelerates discovery by months or years becomes an indispensable commercial utility. That is real, sticky, recurring revenue.
The second commercial deployment they highlighted targets an entirely different kind of multi-trillion-dollar asset class, blockchain and cryptocurrency. D-Wave announced a collaboration with Postbon Labs on a quantum classical blockchain testnet.
Which touches on the looming existential crisis within the cryptographic world.
Right, Q-Day. The theoretical point in the future where a gate model quantum computer achieves enough logical qubits to run Shor's algorithm and instantly shatter the elliptic curve cryptography that secures Bitcoin, Ethereum, and the global banking system. The entire digital economy is scrambling to transition to quantum-safe protocols.
And Postbon Labs has engineered a novel proof-of-work consensus mechanism designed specifically to be immune to these future quantum attacks, and they are actively running a testnet right now to validate the protocol. This testnet consists of over 1,600 individual nodes, mining blocks, and securing the network.
The vast majority of those 1,600 nodes are traditional classical computers running high-end CPUs and GPUs. But one of the nodes on that network is D-Wave's Advantage 2 quantum annealing system. And here's the actionable data point for investors. D-Wave is currently outperforming the classical hardware and winning the overwhelming majority of the block rewards.
Yeah, we have to unpack the mechanics of why an annealer is dominating a proof-of-work protocol. Traditional Bitcoin mining requires a brute force calculation of SHA 256 hashes. It is purely about raw clock speed and electricity consumption. But Postbon's quantum-safe protocol relies on a completely different mathematical foundation.
Because the CEO explained that mining a block on this new network requires the node to draw complex samples from a specific mathematical distribution, right?
Exactly. And generating true, unbiased samples from complex distributions is incredibly inefficient for classical GPUs. They have to run expensive simulated algorithms like Markov chain Monte Carlo to approximate the distribution, which burns massive amounts of energy and time. But a quantum annealer inherently settles into natural distributions based on quantum fluctuations. It samples the distribution natively, instantly, and with a fraction of the energy footprint.
Think about the geopolitical and financial implications of this. The Bitcoin network currently consumes more electricity than medium-sized sovereign nations. If the industry is forced to transition to a quantum-safe proof-of-work standard, and D-Wave has empirically proven that its hardware is exponentially faster and vastly more energy efficient at securing that network, they have established an insurmountable first-mover advantage.
Oh, without a doubt.
We are talking about the potential to provide the underlying hardware infrastructure for the next generation of decentralized finance.
The company is actually currently executing a detailed benchmarking study to quantify the exact energy efficiency delta between their quantum node and the classical nodes, but simply proving that a quantum computer can actively and dominantly mine on a blockchain testnet today is a massive commercial proof point.
This all transitions us perfectly into management's financial guidance and their technological roadmap. Because everything we just discussed, the drug discovery, the crypto mining, the dual rail architecture, has to eventually translate into forward-looking spreadsheets for the CFO. The first major revelation was a significant upgrade to their physical systems sales forecast.
Historically, management had conservatively guided the street to expect one physical system sale this year. On this call, they explicitly upgraded that guidance. They now anticipate closing 2 to 3 system deals annually, with at least 2 systems physically delivered and recognized in 2026.
Upping guidance in an environment where interest rates are historically volatile and corporate CapEx budgets are under intense scrutiny is a massive flex of confidence. But the CFO, John Markovich, offered a very deliberate, detailed caveat about how these multi-million-dollar deals actually flow through the income statement.
He did. He was effectively warning analysts not to expect sudden, massive spikes in quarterly revenue, because the revenue recognition process for a $20 million quantum system is agonizingly methodical.
It's like closing on a massive commercial skyscraper. You don't just hand over the keys and cash the check in an afternoon.
Not at all. Recognizing the revenue from the Florida Atlantic University deal will likely take several quarters. The site preparation alone is a massive engineering undertaking. The client has to install heavy magnetic shielding to protect the system from ambient electromagnetic interference.
Oh, wow. I didn't even think about that.
Yeah, and they have to build out specialized extreme cooling infrastructure and secure a stable supply chain for liquid helium just to run the dilution refrigerators.
Once the room is prepped, D-Wade has to physically ship the cryostat, install the processors, and begin a rigorous multi-week calibration phase to ensure the qubits are reaching their specified coherence times. They cannot recognize the bulk of that 20 million until the system passes site acceptance testing and is formally handed over to the client.
Right.
And even then, a significant portion of the contract value is likely amortized over 3 to 5 years as ongoing maintenance and QCAS software support.
Which is why the most vital metric for financial modelers right now is the RPO, or remaining performance obligations. This represents the total value of signed contracts that have not yet been recognized as revenue. D-Wave's RPO sits at $42.4 million.
That is a staggering 563% increase year over year.
And the golden nugget within that metric is the timeline. Management stated that 54% of that $42.4 million backlog is contractually expected to be recognized as actual top-line revenue within the next 12 months.
If you are building a discounted cash flow model for this stock, you now have an ironclad guaranteed revenue floor of roughly $23 million hitting the books over the next 4 quarters. That is completely isolated from any new sales they might generate. It provides unprecedented visibility into their near-term cash flow and validates that the underlying commercial engine is firing.
But financial visibility only matters if the technological foundation remains competitive, which is why management used this call to lay out a highly aggressive, multi-year technological roadmap for the gate model architecture they acquired from Quantum Circuits.
The timelines they committed to are fascinating, and they demand scrutiny. By 2028, D-Wave promises to deliver a system with 175 physical qubits that actively demonstrates error correction. By 2030, they project achieving 10 logical qubits. And by 2032, they are targeting the Holy Grail, 100 logical qubits.
We have to unpack the profound difference between a physical qubit and a logical qubit here, because it is the single most misunderstood concept by retail investors in this space.
Right. When a competitor like IBM issues a press release boasting about a 1,000 qubit processor, the market assumes they have reached commercial utility. But they are talking about raw, unstable physical qubits.
Exactly. A physical qubit is the actual tangible microscopic hardware component, the superconducting circuit printed on the silicon wafer. But because they are so intensely fragile and prone to decoherence, you cannot trust a single physical qubit to complete a complex calculation without error.
Yep.
To solve this, quantum engineers use surface codes to group massive numbers of physical qubits together to act as one perfect, stable, conceptual unit of computation. That synthesized perfect unit is a logical qubit.
It is essentially a protected mathematical manifold. Depending on the architecture, it might require 1,000 noisy physical qubits to synthesize just one reliable logical qubit. So if D-Wave can hit 100 logical qubits by 2032, what does that actually unlock for the end user?
The consensus among quantum physicists is that 100 logical qubits represents the threshold for broad commercial supremacy. At 100 logical qubits, the system can unequivocally execute algorithms and solve chemical simulations that would take the world's most powerful classical supercomputers millions of years to complete.
Millions of years down to minutes.
Yeah, it is the tipping point where classical architecture becomes obsolete for specific high-value tasks.
And CEO Alan Barrett took a very targeted shot at the broader industry regarding these timelines. He explicitly called out competitors for constantly revising their roadmaps, quietly changing their technical milestones, and to use his exact words, moving the goalposts, as the brutal physics of scaling physical qubits into logical qubits finally catches up with their PR departments.
He argued that D-Wave's roadmap is inherently different because it is anchored in demonstrated empirical technology, specifically the erasure detection of their dual-rail qubits and the multiplex wiring of their cryogenic systems, rather than just publishing aspirational dates to keep venture capitalists happy.
It is an incredibly bold claim, but you have to acknowledge their track record. Over the last decade, D-Wave has successfully engineered and commercialized 6 distinct generations of their annealing systems, generally delivering on their stated schedules. They possess a legacy of manufacturing execution that many of their purely theoretical, SPAC-funded competitors entirely lack.
So we have the explosive bookings, the massive acquisition, the real-world utility, and the technological roadmap. The question is how we synthesize this all into an investment strategy.
Let's pull this all together into the bottom line for the listener. Based on the data in this earnings call, I want to construct the definitive bull case and bear case for D-Wave Quantum. Let's start with the bulls. If I am buying this stock tomorrow morning, what is my foundational thesis?
The bull case rests on 3 unshakable pillars. The first is financial invulnerability. They are sitting on nearly $600 million in cash. In an industry defined by massive capital burn and constant secondary offerings, D-Wave has virtually eliminated the immediate risk of shareholder dilution. They have the runway to simply put their heads down and engineer.
Pillar 2 has to be commercial traction. We aren't looking at theoretical revenue models anymore. They have a $42.4 million contracted backlog that will systematically convert into recognized cash flow over the next 12 to 24 months, and management is actively raising guidance on physical system sales. Real enterprises are deploying this hardware to optimize AI pipelines and secure blockchain networks today.
And the third pillar is technological dominance. Following the $250 million acquisition of Quantum Circuits, D-Wave is the only pure-play company on the planet vertically integrated across both quantum architectures. They dominate the commercialized annealing market, which BCG values at over $200 billion, and they now possess a highly disruptive dual-rail gate model architecture that fundamentally solves the error correction and cryogenic wiring bottlenecks that are currently suffocating their largest competitors.
It sounds like an impenetrable fortress of a thesis, but our mandate on Talk Tickers is total objectivity.
Let's flip the board. Give me the bear case. Where are the systemic risks hiding in these numbers?
Well, the bear case is entirely rooted in the brutal realities of hardware execution and enterprise sales cycles. That 81% top-line revenue drop, while mathematically explainable due to last year's anomaly, exposes just how severely lumpy and unpredictable this business model is.
Very true.
If a university delays site prep on a $20 million system by just 3 months because of a local permitting issue, D-Wave's quarterly revenue will look catastrophic to the algorithms. You're dealing with incredibly concentrated customer risk. Furthermore, integrating a $250 million acquisition is never seamless. The R&D costs are actively skyrocketing. Merging the dual-rail qubits from Quantum Circuits into D-Wave's proprietary cryogenic multiplexing architecture involves unprecedented engineering challenges.
If they encounter a fundamental physics roadblock in scaling those dual-rail qubits to the 100 logical qubit threshold by 2032, that $250 million acquisition becomes a massive write-off. An investor holding this stock requires a cast-iron stomach for quarterly volatility. The full realization of this bookings pipeline is going to take years to translate into smooth, predictable, compounding earnings.
So what is your final verdict?
D-Wave represents one of the most compelling, aggressively capitalized opportunities for investors seeking direct exposure to the foundational hardware that will power the impending convergence of AI and quantum mechanics. The fact that a conservative CFO is raising physical sales guidance in this macroeconomic environment is a screaming bullish signal.
Yeah, it really is.
However, this is fundamentally a deep tech infrastructure play. It requires a 5 to 10-year time horizon. It is not designed for momentum traders looking for a quick swing trade. It is a foundational bet on the entire next epoch of human computing.
Which leaves us with one final, deeply provocative thought to mull over. Toward the end of the Q&A session, CEO Alan Barrett dropped a line that felt less like corporate speak and more like a historical warning. He said, "The quantum computing shakeout is coming. The industry is rapidly moving from the era of promise to the era of proof."
It is a direct shot across the bow at the dozens of quantum startups surviving purely on theoretical white papers and venture capital hype. When capital gets tight, only the companies with functioning hardware and paying customers will survive.
Exactly. But it's bigger than just the startups. Think about the physics of the dual rail technology we discussed. If D-Wave has truly bypassed the error correction bottleneck that requires 500,000 physical qubits, and they have solved the cryogenic wiring nightmare, well, we might not just be looking at a successful financial quarter for a mid-cap stock. We might be looking at the exact historical tipping point where classical silicon supercomputers officially pass the baton to quantum mechanics.
Keep your eyes intensely focused on that 42 million backlog. Watch exactly how and when that contracted value converts into recognized top-line revenue over Q2 and Q3. That operational execution will be the ultimate proof of their technological promise.
We started this analysis talking about diagnostic X-rays. D-Wave's Q1 report might initially look like a blurry, terrifying scan when you only look at the top-line revenue drop. But once you understand the physics of the dual-rail acquisition, the massive cash runway, and the explosion in enterprise bookings, the picture of this company's underlying health snaps into incredibly sharp focus.
It really does.
The bone isn't broken at all. It's actively reinforcing itself with titanium. Thank you for joining us on this Talk Tickers Deep Dive. And remember, no matter how complex the technology gets, there's always a way to read the data. Keep learning, and we'll see you in the market.